Well, hello CiBillions. Welcome back to our channel, and today we will be continuing with our financial freedom series. Now, in our last video we talked about how and why you should increase your income, and in today's video we will discuss about investing your hard-earned money into various places to earn passive income and finally achieve financial freedom. So, let's begin. Now, when you are finally ready to hit the market and make various investments, a question arises about what are you going to invest in? In today's time, there are almost a million ways to invest and multiply your money. You could invest your money into stocks, bonds, mutual funds, index funds, hedge funds, certain deposits, commodities like gold and silver, real estate, cryptocurrency, any new businesses or startups, or buy a lottery ticket. You can do whatever you like and invest according to your own needs and requirements. The topic of investing is so complex and dynamic that covering it in a single video is almost impossible. But all we can tell you is that each and every investment has their own pros and cons, and that it's your responsibility to carefully analyze everything before investing your hard-earned money into anything. When it comes to investing, don't rely on anyone and try to become knowledgeable enough to make wise decisions all by yourself whenever you're required to. Although we can't cover the entire topic of investing, we will certainly give you the timeless pieces of investing principles that are very important for anyone to begin their journey. These are tried and tested formulas that can be used by anyone, anywhere and anyhow. But before we give you the principles and formulas, we would like to tell you that this is a channel of the entrepreneurs, by the entrepreneurs and for the entrepreneurs. And since we are aiming to be the #1 entrepreneurship channel on YouTube, please help us by subscribing and share our content with your friends and family to educate them further on the topic of business and entrepreneurship. And do follow us on Instagram. Our community of like-minded people is growing bigger day by day. And now we come back to our topic. So the principles are as follows. And the first principle is save 10% of your income. No matter how less you earn, you should always have a habit of saving at least 10% of your income. This is the first step to financial freedom. You might say that my salary is too low, but always remember that it's not the salary that makes you rich, it's your spending habits. If you have the right spending habits, sooner or later you will be on the path to financial freedom. The second principle is invest in yourself. An investment in yourself pays the best dividend. It is the best quote that we have ever came across. Live by this quote if you want to achieve financial freedom. Invest in books, courses, seminars, webinars, consultation or anything that can make you better with each passing day. The market can offer a return of 12 to 15% at a maximum, but only an investment in yourself has the potential to double or even triple your investment instantly. Invest in yourself first before investing in anything, and you would thank yourself. Now the third principle is to invest safely. Now when you finally invest your money in the market, don't go for high returns or chase a trend. Instead, opt for an investment that has low risk and can give you consistent returns of about 7 to 9%. We know that it sounds boring, but you're fairly young, naive and inexperienced. This will help you to build confidence and start your financial journey on a positive note, and as you gain experience with time, you can take more risk for better returns. Now the fourth principle is invest wisely. Now when you have finally tasted some success, you can take more risk to enjoy better returns. Now this won't happen overnight, but you will eventually get better at it. Now you can consider various investments, evaluate them according to their pros and cons and invest in them according to your age, disposable income, risk appetite and your own financial goals. Now the fifth principle is to diversify smartly. Now that you are successful in investing and earning good returns, it's time to diversify your wealth and maintain a balanced portfolio. But don't overdo it. Diversification is an aspect where many people fail big time. They either diversify too much or they don't diversify at all. Both are harmful for you as an investor. Consult with a financial advisor or educate yourself and then diversify accordingly. Now the sixth principle is keep the principal amount safe. Now one of the best investment advice is to never lose your money in the first place. No matter how tempting the deal is or how great returns you're promised, you should never invest your money into shady investments if there is no guarantee of a safe returns. Many times people lose their principal amount invested, let alone getting any returns on it. This happens because most people just consider the return on investment, not the return of investment. The return of investment is more important than the return on your investment. Now the next principle is to keep yourself updated. Now it's your own responsibility to keep yourself updated with all the latest news about what's happening in the market, who's going bankrupt, which company received a major funding, or when is the next recession coming. If you keep yourself updated, you can master the ability of earning passive income and achieve financial freedom as soon as possible. Now, the last principle is to master patience. In order to be a good investor, you need to be patient enough to wait for good opportunities. You don't necessarily need to invest regularly. You can also sit on cash and wait for the right opportunity. One of the best investors of all time, Warren Buffett, made a majority of his wealth after the age of 60. Hence, be patient enough to wait for an opportunity where you can earn higher returns. Well, that was it for today's video. Comment down below about your thoughts and opinions about investing, as we love to read about them. Thanks for being with us until the end, and we'll meet you in the next one.